Welcome to another week in review. We're going to be looking at the trading week of June 2nd, 2025. Start off with some data. Monday is June monthly open, so we closed May fairly strong on Friday. So the new monthly open candle, if you want to look at it that way, will be tomorrow. Tomorrow we don't have much. We have 9:45 a.m. we have manufacturing PMI. 10 a.m. we have ISM manufacturing, and then 1 p.m. we have Powell speaking. I haven't actually looked into what he's talking about. I don't usually bother actually looking at what he's talking about. I just know that obviously the market's going to react whenever he speaks. So I'll keep that in mind if I'm in any trades around the 1 p.m. mark. But other than that, not too much on Monday. Tuesday, we have jolts at 10 a.m. We have some Fed speakers from 12:45 onward for the remainder of the day. Again, not too much on Tuesday. Wednesday, we have 8:15. We have the ADP employment change, which that will be important. That'll be market moving for sure. 10 a.m. we have ISM services. Thursday, we have jobless claims as we normally do at 8:30 a.m. And then we have 12 to 2 p.m. we have some Fed speakers again. And then Friday is the big one as far as data goes for market movement. We have the NFP print and the unemployment rate at 8:30 a.m. So not too heavy as far as individual things happening each day, but obviously NFP week can bring some volatility. The expected range this week on the S&P from the at the money straddle on Friday is only about 100 points. So as far as like what's actually priced in from a range perspective, it's not actually being anticipated to be that violent, which I think part of that is normalization a little bit as vol comes down. But I also think that part of that is just the way that this market is going. It seems more and more like we're obviously in a very compressed range. Volatility is starting to compress a little bit. Spots going down as well. So we'll have to see, if we have any type of, tweets from Trump or any type of whipsaw moves that break us out of that range that's expected, and if we have some acceleration away from that range, because that could obviously change things on a daily basis if we see a lot of interest outside of those weekly expected ranges, and you get into those positive negative gamma situations, etc. So won't get into that but just note anytime we get outside that expected range, we can see some kind of weird things happen in the market. So as far as where we're sitting, I'm going to start quickly with just on higher time frames. So the market's in a trading range right now. So we're sitting in balance. We're sitting in 3-week balance. This is an 8-hour chart showing the regular trading hours only. We're in a very defined range. We haven't really done much most of May. So we had that huge gap up through those higher time frame levels we've been talking about for the last few weeks, back above the Liberation Day spikes, which is actually up here. And we haven't done much since. So from a short-term trader's perspective, like intraday trading, some of these rotations have been really good. Some of them have been very hard to catch, at least for me, because a lot of the main areas that I've wanted to trade have happened either overnight, or we've had, Trump tweet or tariff news or whatever it is. It's been challenging. So the bigger thing is, how is this range going to break? So really what we're going to be looking for, we had an inside week last week, and we're sitting inside a 3-week balance range. The best trades really are going to form at the extremes of this range. So it's going to really be, in the bigger picture, it's going to be acceptance above 59.80s or below 57.80s. So basically this 200-point range we have here, once this breaks, should probably give us a pretty nice directional move in the market. Where I sit, at least right now, I'm still generally bullish. I don't really see a reason to look mega short on this market. If we start losing this 3-week balance range, that perspective will change, and I think the sell side trades will be easier. But ultimately, I think that will still probably result in dips to buy, further down if this range does break down. But as far as the intermediate view for me, I do have to be neutral because we did print an inside week last week. We are sitting basically dead center of this balance range, so it can't be married to a positional bias. But as far as the ability of this market to sell, it hasn't shown much of ability at all to sell. Every single dip, every single negative headline, pretty much the entire month of May was gobbled up, and we're very close to setting back to all-time highs again. So that's generally how I see this as far as what we're looking at from an intraday basis. Look at the S&P right here on a 30-minute chart. And you'll see here I don't have much marked in the middle of this range, and that's on purpose. So as far as where we're sitting, like I said, we're in a 3-week balance range. So you can see marked up here, we have the 3 week balance highs up here at 59.87s. This is the ETH high, so this is not included in the in balance per se, because it is set outside regular trading hours. So we have 59.80s, and then we have the bottom of 3-week balance down here at 57.80s. So we have this huge 200-point range, which you can see price has done virtually nothing inside of except go back and forth and chop up and consolidate and chop up short-term traders trying to catch some of these moves. So it has not been easy. This environment has not been easy to trade. I don't care who you're looking at online saying, they're nailing every single market move. They're nailing all of these highs and lows. It's not happening. It's very, very difficult. I've been trading a long time. I've had some difficulty in this range for sure. And that's always to be expected when we have huge periods of consolidation like this. Like we've done literally nothing for 3 weeks except go back and forth. There's been really nice rotations from the highs and the lows. But as far as, short-term intraday, it's been tough. So last week we had an inside week on the RTH session. So the high 59.56 and the low was set on Friday at 58.50s. My main focus early on is whether or not last week's open down here at 58.80s holds on any potential sells down. So the big thing for me will be whether we break one side of last week's RTH high or low. So really whether or not we're breaking away from 58.50s to the downside, really 58.40s. So we still have this RTH gap, which remains unfilled. Really whether or not we're accepting below this gap, so below 58.40s, that would signal to me that we're probably going to test down back into the 200-day, down back into the meat of this this distribution down here, which set the balance low. I would think below 58.40s, we should be looking somewhere around 58.15s, down into 57.90s, and the bottom of this balance range down into 57.80s. The only way I'd really be a seller on this market, at least in the short term, would be a solid amount of volume that takes us below 58.40s. So we would be breaking the inside week low. We'd be breaking down below that. We'd be filling the gap and not reversing at this gap. So if we see volume take us below 58.40s, then I'd look on the sell side to try and probably take us back down into 58.20s and then potentially down to the bottom of this distribution on the weekly. And I think honestly, until really proven otherwise, down into this 58.15s, even down into the bottom of this balance range into 57.80s, we could still even see a dips, these dips get bought and put us right back up. So you have to be conscious, or at least in my opinion, you have to be conscious of responsive buying into the bottom of larger weekly balance ranges. Obviously, these are huge major moving averages. This is the 20-day simple moving average. This is the 200. This is the 100-day. These are huge major moving averages that obviously we could easily see responsive buying or anywhere around this range. So just be conscious, if we see an early puke or a puke some point this week, every single dip and every single sell so far has been bought up relatively quickly. So just be conscious of not getting stuck short in the hole down here. So that'll be my only word of advice. But if we do see volume and we do see acceptance and value start to form, so if we see a distribution start to form below 58.40s and we see real acceptance below this, then I think the move is going to be down to test the bottom of this, ultimately down to test the bottom of balance down here into 57.80s. I think any early weakness will be marked, like I said, by early acceptance below 58.80s. So if we're below last week's open, then I do think that ultimately we're going to be testing the bottom of this weekly range, and then we'll have to see if there's any responsive buying down here. I think as far as the best trade setup we could get this week would be probably some type of puke down into the bottom of this weekly range on the inside week, and then potentially a rebid and acceptance back inside 58.50s, which just puts us back into balance rules and goes and tests the other side of this range up into 59.50s. So I think early strength on this market. So if we see, Globex and Monday start to rip us above last week's value area high, so basically above 59.30s, then I think testing the last week's high is very natural. at 59.56s. If we start accepting basically back above 59.30s, and really if we're accepting back above 59.50s, then it's all longs for me, and I'll continue to look for the move upside to test the top of this balance range up at 59.80s, and ultimately clean up this ETH high on the weekly that we have at 6,000s. We would probably see some responsive selling up into the ETH high. I don't really think, I don't really think I'm a seller of this market unless we really see acceptance below 58.40s, or if we see a real fail up into the 6,000 to 6,020 range. So if we see a lot of volume get stuck up here, we see a lot of late buyers get put offside, and then we start failing back below 6K, then I think we could see some mean reversion back down into the meat of last week's range, and we're basically just, again, stuck in this balance. So ultimately, if we do see like a really nasty look above and fail of this 3-week balance range, which again I think would only really form if we're failing up into 6,020s and then back below 59.80s, then that could be the signal really to start looking more short on this market in the short term and clean up some structure lower. And then if that is the case, if we do ultimately fail up here and we start to accept back inside this 3-week balance range, the look above and fail rules for balance would ultimately target the opposite extreme of balance. So back down into 57.80s. So really to sum that up, that's a lot of words, but really to sum that up, I am still generally bullish. I am still looking for dips to buy. I think if we see some tests early on of 58.50 to 58.40s and we see some responsive buying down here and we really can't snap below this, this will be a nice long setup to have continuation drives and ultimately continue us back, hopefully back to all-time highs. And again, I'm really only a seller if 58.40s offer heavy and we see volume and a distribution start to form below 58.40s. So you want to see like actual volume and meat get put below 58.40s and then look for the test of the bottom of balance at 57.80s. The other situation where I'd be a seller would be a really strong fail of 6,020 to 6,008s. And then again, if we snap back below basically this 59.90s area, I look for the sell all the way back down into the meat of last week's value, the meat of May's value, and then into the bottom of balance down into 57.80s. So it's tricky. These are tricky. The thing is, we're dead center of this range, right? So I think ultimately for most traders, even myself included, I think the best setups are really going to be around the extremes of last week's range. So really how last week's inside week breaks will probably give you the best risk to reward really here. So this distribution and this range in here has been extremely unforgiving, especially for short-term traders, because we have an inside week or inside day rules, inside bar rules, however you want to look at it. But because we have an inside week, acceptance outside of last week's inside week range should target the extremes of balance that we're inside. So we have balance within balance, essentially. We have an inside week inside a 3-week balance range. So if we start to accept outside 59.50s, be looking for the extremes of balance of 59.80s and potentially up to 6K. If we start accepting below this 58.50 to 58.40s area, be looking really to see if we get down into the bottom of the extreme of balance down into 57.80s. And again, noting we have, this giant range of moving averages that we could easily see a lot of responsive buying and a higher low again put in somewhere in this range. So got to be careful with that. Have to be careful selling this market still, in my opinion, but it's been very tricky intraday. The Nasdaq is basically going to be the same. I haven't traded it much. I've traded a little more recently. I had a nice long trade on Friday for the Nasdaq, which basically made the day because otherwise it was just a crapshoot for me. But as far as ranges for the Nasdaq, we have stacked weekly opens at 21,260 to 21,200. And again, I think early strength and weakness could be dictated by how this trades. If we do see, if we see a bit of a sell down, or if we see some just drift back down to last week's open, if we're holding, if we're holding stacked weekly opens here, last week's and the prior week's open down in this range. Again, I think the easier trade is going to be the long trade back up and look for the top of this range up into 21,500s. The Nasdaq didn't have an inside week, so the Nasdaq was an outside week up. It's still framing higher, so ES is in balance on the weekly, daily, weekly, and monthly. The Nasdaq is in balance on the daily, but we have weekly continuing to frame higher. So that's one thing to consider too, is that even with all the bearish headlines, even with everything coming out about tariffs, etc., the Nasdaq is still leading, and we are somehow still holding up. So really, until we see the Nasdaq shift, and I think the bigger thing I'd be looking for, again, from a seller's perspective, is if you want to be looking mega short, you still want to see weekly closes below the prior week, and we haven't had those since March. I said this in the last video as well, and it's still true. We still haven't been able to close a week below the prior in months. So until we really see that happen, until we really see sentiment shift and see all of that macro data and all of those headlines actually start to reflect in what's happening with price on a bigger scale, I think the simpler thing, at least in my opinion, is to continue looking for some of these dips to continue buying. That's how I'm looking at it. The Nasdaq, I think, again, like acceptance below last week's low will be big for sellers. If they can actually snap below 21070s, then again, I'd be looking for to backfill this range, which we put in the week prior, probably down into 20,800s. And again, up here, hugely important level at 21,550s. If we have acceptance above 21,550s, it's all longs for me. I'm going to look to take out this naked POC we have up here at 21,800s and ultimately clean up the ETH high we put in at 21,850s. So hopefully that helps. I realize I spent a lot of time talking about some scenarios on the S&P. I think it's important just to kind of talk this through, because again, this has been very challenging. It's been a very dense range. A lot of people, myself included, some days have gotten chopped up inside this range, and really until we break away from it, I think it's going to be most beneficial to look at the edges of this range, especially last week's high and low, and try and manage your trades around that. That's going to be my plan for the most part, unless we see something really clear in the order flow side, early on, that I can get some meat into. But that's how really I'm going to try and manage this week. And it's also NFP week too, so just keep that in mind. So hopefully that helps. If it does, leave a like, comment on the video, subscribe if you haven't. Appreciate your time. Thanks.